Hello, hello. We are not going to talk about the halving. We are going to talk about the doubling. Price go up, right? And okay, cool. These are all my old-time buddies, and we have fought the war on like the block size war and the Jaehan's not here, hopefully. Like all this war that we have fought before and we all won, and now we are getting to season 2. Like season 1 is all about the block size, the lightning, and then now we are into season 2 because like Bitcoin used to have a really good still have a really good like monetary gravity effect, right? It's like the fat is growing when it comes to mind share, when it comes to everything, but we don't have like enough like monetary velocity on top of like Bitcoin. And I think we can probably start the question with like Monique because like Monique has been building Bitcoin layer 2 like before layer 2 is even a thing. Like it's like even before like layer 2 on Ethereum was like even a thing, right? And so it has been ages. And then so how do you see the current like landscape of like Bitcoin layer 2, like given like Bitcoin is slow, like the development of like Bitcoin ecosystem is slow, but like the good thing for us is we have this like time machine to see what's happened on like the Ethereum universe and then learn from them. And now the liquidity is like highly fragmented in like the whole Ethereum like universe with like 20, 30 like different layer 2s out there. And then so how do you see that happen for Bitcoin? Yeah, from
okay.
Monique.
First of all, hi everyone, excited to be here. And I think I'll start off by, there was a tweet by Kyle Samani from Multicoin yesterday. And he was basically saying that, hey, the biggest problem with Bitcoin right now is that there's so many different like L2s and protocols like BRC20 or ordinals and this and that. And I was like, hey, wait a minute. I thought the biggest problem with Bitcoin was that nobody ever wanted to build on Bitcoin, right? So I think like imagine how much has changed just in the last 1 year. That people are saying, hey, the biggest problem is there's too much happening. Like there are too many standards, too many L2s launching and stuff like that. And I think that's just an amazing thing. And that is a very, very big shift. That's why we are calling it the Bitcoin Season 2. I think some of us saw us a little earlier than others, but it's happening now.
Cool. And so for Matt, and yeah, so Matt has been building forever. And then so how you can handle all this mental aging, like in crypto, right? Like, and so from TBTC to Thesis, and then now to Muzzle, and you have been just like heart beating like the Bitcoin Season 2 forever, right? Just like you're hoping for this day. And then so how do you see we can fix, like first like how we can fix this monetary velocity problem, and how we can potentially unify this fragmentation problem?
Yeah, so the way that I look at it is early on I ran a Bitcoin payments company when that was something we could talk about before Lightning. And what I learned running a Bitcoin payments company is no one wants to spend Bitcoin, right? So I think we know in this market that the answer can't be just move Bitcoin faster. It needs to be stables against Bitcoin. It needs to be lending, and we need to go where the users are, and that's not payments anymore. So that's our plan with Mezzo.
And so for like Sanka?
So I see the L2 ecosystem as more like every team trying to build their own sequencer. So eventually interoperability between the L2s are going to be a big question, and you really want to innovate, but at the same time, you don't want to be fragmented. So at Babylon, because of Bitcoin staking, we're looking to bring this shared sequencing so that either you use the base layer validators to go and help it out, or there are like other interesting designs which can come in to help the L2 space. But we're super excited. I think I completely echo with Munib's point, more is better.
Yeah, I think it's like a free market solution, right? Like you let the builders come in, they're gonna throw up like 20, 50 different solutions. Some of them are gonna stick, some of them are not gonna stick. So I wouldn't worry about fragmentation at this point. Like we're too early right now. Like if you look at Bitcoin is like, depending on the market price, with $1.2 trillion in capital, less than 1% of it right now is actually deployed. Like we are at a very, very early stage, and I would like to see that number move, right? Like to 1%, 5%, 10% at some point. Like imagine Coinbase is a single company, and it sits on something like 7% of Bitcoin supply. That's one company.
Ledger as well. So if you count Ledger, like Ledger's at 10%, like more than 10%.
Yeah, but those are at least hardware wallets. This is a single company.
Oh yeah, it's just
and Bitcoin ETFs as well, right? Like they're buying up Bitcoin. I think at some point BTC deployed in L2s would be more than BTC held at the ETFs, right? And I think that would be a very interesting metric to watch for.
Yeah. This will lead to my next question. So we talk about there's like active Bitcoin and like passive Bitcoin. Like active Bitcoin is the Bitcoin that's on chain, right? Like WBTC, but let's do like only 1% of the supply. And like Matt has been working on TBTC for 3-4 years, and then it's kind of hard to scale. Like before season 2, it's very, very hard to scale this like active on-chain Bitcoin. And most of the Bitcoin are still passive, and then so either in ledger, like dormant, right, or just on centralized exchanges. And now we have the other new flow coming in, but like those are all in institutional like custody, right? So like that's what I consider as like a paper Bitcoin. They're not like real Bitcoin, but like paper Bitcoin, like the real Bitcoin is still somewhere else. And like even all of us, we are hoping to get another order of magnitude when it comes to the monetary velocity for Bitcoin and how we can potentially activate more passive Bitcoin into active Bitcoin. And also like Sanka, you were working on Thorchain before. Like that's the most useful bridge to move like active Bitcoin around. Yeah, so probably like start from you, like how we can activate all these like passive Bitcoin.
Yeah, so right now the $10 billion wrap Bitcoin market, it gives you a lending opportunity between roughly 0.2 to 1% in the lending protocols. And what we see is there's, because of this ETF revolution, there was an example that back in 2021 when there was Celsius and they gave like 8% on Bitcoin yield, they were able to get like 43,000 Bitcoin, which at today's market price is roughly 4 billion. So we see that the Bitcoin holders, like the idle Bitcoin holders, they want to get yield, but their concern is they don't want to be bridging, they don't want to have other trust assumptions, and that's where we are super excited to kind of like see like Matt's trust at TBTC as well as Bitcoin staking through Babylon, that can we give the Bitcoiners the comfort they want, as well as keep their Bitcoin on the Bitcoin chain while getting this yield.
And Matt, like, what are the learnings from TBTC and then how we can do better to activate those Bitcoin?
Yeah, I mean, I think the biggest one is that we have not seen tokenized Bitcoin grow since WBTC. I mean, I've been trying for a long time, so you can put that on me if you want. But like, what grew WBTC was DeFi Summer. And so that was yield shooting out everywhere, and then people wanting to use their Bitcoin as more useful collateral. So I think we have this set up for another event with season 2. Where I don't know if it's going to look quite like DeFi Summer and we all need to buy like food coins or anything, but I do think that people want to rush in and they want to do something that feels fun and new and maybe that'll make them money. They're not just going to casually be like, oh, you know, my Bitcoin's been in cold storage for 7 years. Why don't I mess with that? Because it's working. So why break it? How are you thinking about this, Manib?
Yeah, Unique.
I think the way I think about this is that a lot of people have this image that Bitcoiners don't want to spend their Bitcoin. And I think I'm losing this a little bit, but I sort of disagree with that.
Can we have a handheld?
Maybe get a handheld mic or something, but yeah. So I sort of disagree with that. Because if you look at Bitcoiners, whenever there's an opportunity to actually spend BTC, like they actually spend BTC. The original Ethereum ICO, like I participated in it, it was done in BTC. Like Rootstock raised 35,000 BTC.
I still have my 100 BTC with them, and they freaking done nothing. Okay, and so if like they're not in Latin America, like there must be like class action.
Yeah,
okay.
If you look at Ordinal's market, right? Like within 6 months of Ordinal's launch, Ordinals are trading like more than ETH NFTs, and they're sustaining the trading volumes, right? Same is happening with like Runes and other things right now. So I think it's sort of like a misconception.
Can we have a handheld, please?
Don't want to spend their Bitcoin. I think they don't, right now the tooling isn't there. Right now the wallets aren't there. And I think once we actually bridge that gap, like we have the infrastructure and the tooling and the wallets, we should be able to do that.
I guess I'll take the counter side of that since we were just doing Bitcoin payments. I don't think people want to spend their Bitcoin. They want to invest their Bitcoin.
They want to make the Bitcoin productive. And so just like generally speaking, it's not about spending. It's like making Bitcoin productive.
Right.
But that's what the monetary velocity is, right?
Yeah. But I mean, you're right. People will pay. They just only if they think they're going to make more. They don't want to buy their coffee or pay their rent in Bitcoin. At least I haven't seen that yet.
Yeah, I think the rails kind of like suck right now, right? Like so my mental model is you separate BTC the asset from Bitcoin the rails. Everyone loves Bitcoin the asset. They get it, right? Like this is something valuable. They want to purchase it. They want to hold it. But I think Bitcoin the rails are really, really bad right now, right? This is the sort of like work we're doing at Stacks, and there are other projects as well. What we're trying to say is, can you have really fast, really cheap BTC transactions on the L2? And once you have that, let's say I don't want to spend my Bitcoin, but it's super easy to automate. Like whatever I'm spending, I'm also buying at the same time. But sometimes people love to pay in BTC because of the privacy, like sort of privacy that comes with it, right? I don't want to give my credit card information. If it becomes literally like a Stripe API for people to integrate BTC payments, they're fast, they're cheap, which is a sort of the vision that we have. I think this is what Lightning tried to do and hasn't been able to do. Like, let's be honest, like it hasn't been able to do that so far. I still think that once the tooling is there, when it becomes like a Stripe-like experience for developers to just easily integrate fast, cheap BTC payments, I think we will see a lot more of this happening.
Cool. Yeah, just like talking about this like Bitcoin productivity, right? And like Matt and I, we like talk about like this like hyper Bitcoinization world where we can measure like the certain percentage of like world's like GDP, like on-chain, right? Like the on-chain value generation should equal to like a certain percentage of like the world's GDP. And so like that's our just wild dream. But currently, like unlike Ethereum, because like Bitcoin is like a POW coin, right? So like POW coin, like all the reward like goes to the miner, but like not to the stakeholder. So like there's no thing such as POS, like inflation reward. So like POS inflation reward, like in like the Ethereum world, like now it's like 3% something, like as like a base yield. And like, what do you guys think can be like the base yield in our universe, and then where is the base yield coming from? Like, probably can start from Sanka.
Yeah, so one of the ideas which is out there in terms of like Athena, BounceBit, is a lot of the centralized exchanges, they have a lot of Bitcoin. And in centralized exchanges which have perps, if you are short the perp, you get paid funding rate in a trending environment. So you're short Bitcoin on the centralized exchange, you can long your Bitcoin on the staking contract for staking your Bitcoin on Babylon. So now you're delta neutral, so you don't have exposure to Bitcoin, but you're catching that funding rate yield. So this is like one of the many ideas which could offer a competitive staking yield compared to ETH.
Yeah, and just want to throw out a number, and conservatively gonna be like 10% like annualized.
Yeah.
Yeah, like which is actually much better than like
Celsius,
BlockFi, and then like without sacrificing all this like counterparty risk.
Right.
Yeah, and like Matt, you're working on like Meso has some very interesting plan as well.
Yeah.
Like, can you share a little bit?
Yeah, so I mean, when you look at yield across the space, where did it come from? The money printer, one way or another, someone launching a new token. And then you start going into, okay, like LP fees, you can kind of break DeFi down. I'm trying to avoid the centralized exchange solutions. Yeah. The returns are great, but they make me uncomfortable. But for Meso, what we're doing is we're saying, okay, well, we hope people will want to at least spend their Bitcoin on gas fees. So that's a way to get honest yield in the same way that like Lightning routing fees is honest yield. It's not doing anything super crazy. The question I think is going to be, what is the risk-free rate? And how high can we get that? Because like
what's
if you
the
look
base?
at because if you look at something like Base, for example, if you look at these other L2s, it's so spiky. There's flash APY, and I think it's going to be interesting because Bitcoin holders so far have not been flash APR investors. They've been a little bit slower and more methodical.
And Muni, and so you guys has been building like the DeFi for Bitcoin for like 5 years now, and so I've tried to use like some of the protocols on Stack as well, like Atlas and like bunch others. And like, how do you see like user like interact with like Stacks? Like, are they chasing yield? Are they chasing utility? Or like, what are they like looking for when it comes to value proposition?
Yeah, I think one of the interesting things about Stacks is that it has a base protocol yield in BTC. And that is a product that I've seen that it's very sticky. Like, people love it, right? Like, even when it launched, so the mainnet launch happened in like early 2021. And I still remember this friend of mine was texting me and he was like, oh my God, this Bitcoin just showed up in my wallet.
right? Like this is L1 Bitcoin, right? Like this is almost like liquid gold, and you're suddenly getting it. And people, so the people who use it, they just love it. I think today there's something like $1.2 billion locked in Stacks consensus. And I think at current rate, something like $200 million of BTC is going to go out like this year to the people who are participating. And that's a very sticky product. Like during the bear market, people have been sort of like using it. And now I'm seeing like other protocols emerge like on top of the Stacks L2. Like for example, someone's working on, can people earn this yield? Because right now you need STX capital to earn the yield. So they're basically looking at like once Nakamoto upgrade happens and SBDC, which is our way of moving L1 Bitcoin into the L2, that goes live. Can you use BTC to earn this yield? Right. So they're working on mechanisms where maybe you're hedging the price risk for BTC to STX conversions, but can we bring in BTC for earning this yield? And the interesting thing there is you can enable like liquid BTC. So you lock your BTC on the L2, you start earning the yield, the base yield, and your BTC is still liquid, right? You get something like STBDC, and then people have never seen that before, right? Like so that is again a very interesting product. Once that goes live, I think we'll see that people want to earn the base yield, but they also want to deploy the capital in other things that are happening on the L2 as well. Yeah, so basically like making their like cost of like capital like much lower, right? And so from my experience, and probably that's like prior to your like Nakamoto upgrade, and which is a huge one, congrats. So prior to the Nakamoto upgrade, and it's very, very hard to use, to be honest, and it's just so slow.
No, let's not soften the words here. It's like extremely hard to use, right?
Right.
I think the thing is that when we launched, we were coming from the Bitcoin camp, so I think we were very much in the decentralized, optimized for decentralization and security, right? So the L2 right now, the way it runs is that there is a L2 block every time there's a Bitcoin block. And a Bitcoin block comes every 10 to 40 minutes. And users in the same time are getting used to Solana, even Ethereum or other places. So that's like, the UX is just not acceptable at all, right? And I think that's been the focus for Nakamoto, that can we decouple the L2 blocks from L1 blocks and focus on giving people like a great UX, not just for the L2, not just for Stacks, but for Bitcoin in general. Because I think most people are going to use BTC on the L2 instead of the L1, because L1 cannot take like hundreds of millions of users. People will have their first experience of BTC on the L2. And I think that's our thesis.
Cool. Yeah, and probably we can talk about, let's see, and I have some like the off-script question as well. So I think it would be spicy like to ask you guys now. So we all know there's a power vacuum currently within like the Bitcoin core dev, right? And just like for the audience, there's probably just like 10 developers like on Earth like to control the future of like Bitcoin. But the thing is like 10 of them, they cannot make decision. Well, so they just don't want to make any decision because the state is too high for them. So what's currently right now is like if we want to have like a better version of like the Bitcoin like just an opco, and no one dare to like step up and say, hey, we have to make the change, right? So like, what do you guys think about this? So these are two questions actually. One is, how do you consider the future, if ever possible, that we can enable like OpCat? So like OpCat is something very, very interesting like for the audience as well. Like so like OpCat is like a strip of code, and that was there like by Satoshi. Satoshi removed the code and then consider it's kind of like risky. And then now we want to reactivate the code like to make it like a soft fork, and so to make Bitcoin base layer more powerful. So the question for the panelists here is like, do you think we should push for like OpCat, and then how we can push for it? Like given there's a power vacuum out there. And then so who should be the political leader, or like should we have like an alliance, like consortium, whatever, like a Brendan Wood like 3.0 like type of thing? Yeah, probably can start from Sanka.
So I like the fact that we want more functionalities on Bitcoin, and especially at Babylon, we are bringing staking to Bitcoin. So the Bitcoin not having the smart contract is a major constraint for us, but we are using cryptography and scripting to kind of enable slashing. So having more functionality through OpCat upgrades is going to be great. But I think being an economics myself, I think the more important point, if I get to the nuance of your question, that let's say if there are 10 developers who are controlling the future of the Bitcoin blockchain, what's the kind of power they have that they should be using that to upgrade. So so we should take the example from the proof of stake playbook. Eventually, if any upgrade needs to happen, there has to be economic weight behind the people who are making that decision, because economic incentivization and penalizing economic incentives is the way to go. So I think one way that we think as culturally and philosophically at this point is, if the Bitcoin economy and stacks thesis and some of these L2s, they can make it so big that I think the economic forces are going to actually push for upgrades, whatever is needed.
So, you okay with a little story time, Dovey? So confession, I used to be a big blocker, and for years, and I ended up being on the wrong side of that argument. And the reason I decided I was on the wrong side of that argument is because the New York agreement happened. And so for those of you that didn't see, when the New York agreement happened, a bunch of companies came together in New York and they said, look, we're going to activate SegWit and we're going to activate a 2 megabyte block increase on Bitcoin. And they came out and everyone rejoiced, oh, there's this direction that we can follow. And I'll jump ahead. It would have halted the network if it had activated. It didn't end up being the new direction for Bitcoin. But my learning from SegWit 2x was I wasn't in the room. And every discussion like that, as long as I've been in the space, I felt like I was in the room.
Like Hong Kong meeting as well. So like
right?
There was a Hong Kong one, and just with like a handful of miners there.
Right.
Yeah, right?
Yeah.
So remember?
Exactly, yeah. And so we saw these two groups, and I guess I just realized Bitcoin cannot be driven forward by like a small cabal of corporations, even if I want to be one of them. And sometimes I get to be one of them. And so for me, it's like, I'm fine. Bitcoin doesn't have to ossify right now, but I want to build all of my software in such a way that we work either way. And if we can find a way forward to get some upgrades, then great. But please don't launch a company expecting a soft fork for Bitcoin. That's a ambitious thing to do.
Monique?
Yeah, so I think maybe for the audience, I'll give a very brief overview of like how Bitcoin core development is working right now. Things are actually getting better, right? So there are roughly 4 maintainers, and they're up to like 30 people who actually actively contribute code now. And there are 3 sort of like sources of funding.
Chenko Lab as well.
Yeah. So Jack Dorsey does a lot of funding recently as well. But yeah, so there are multiple sort of like ways that people are donating to Bitcoin core. Things are getting better, slowly getting better. And I think there's core development, which is mostly software. Like they have their next 2 to 3 years of the last time I hung out with them, right? Like they have the next 2 to 3 years actually pretty planned out. Like they have enough to do without any sort of like soft forks or anything else happening. And in some ways, like, you know, everybody looks at Bitcoin as like this durable thing, which is very stable. It's nothing crazy is going to happen. One example that I give, so I started in Bitcoin in 2013. If I dust off a copy of Bitcoin software from 2013, literally, and try to run it today, it will work. It will work with the existing chain tip. Imagine doing that with Ethereum, or like Ethereum has gone from proof of work to proof of stake to like what, right? Like you can't, like, so that level of durability is actually one of the biggest properties of Bitcoin, and you need to maintain that, right? So in terms of how changes actually happen, like it's actually a very messy process. Like it's not documented. Nobody really knows how it even works. In reality, what I've seen work is there are certain people who over time have sort of like earned the respect of a lot of Bitcoiners. And if a proposal actually comes from one of those parties, it has a much easier time getting through. Like, you know, we didn't see that much debate on like Taproot, for example. And we are only now discovering like how many things got enabled because of Taproot, like things like BitVM. You know, we are discovering that Bitcoin is accidentally Turing complete because of BitVM, and Taproot sort of like enabled that. So I do think there's like, I personally would never pick that battle, like where I want to go and, you know, basically argue for a change, because it requires so much work and effort, like it will exhaust you if you're not already part of that select few people who have universal respect. Right? If Adam Beck comes up with a proposal or somebody else, like they will have a much easier time. But that happens over like, you know, years and years, and those people are sort of not interested in making changes to Bitcoin anytime soon. So I really agree with Matt that if you are a builder, this is the same philosophy we have at Stacks. zero changes required from Bitcoin. We assume that Bitcoin is never going to change, and you have to make your solutions based on that assumption.
Cool. Yeah, and I think, so like the next question is a little bit political, like it's actually apolitical. Like we know there's a power vacuum from the core dev, but the thing is that now everybody is talking about like Bitcoin alignment, right? So then what are we going to align with? Because like Satoshi is like not like an actual whatever, right? So we cannot align with Satoshi. And what is this Bitcoin alignment thing, like just like going around? Because when it comes to Ethereum, and then so if you're friends with Vitalik, and you definitely align with like Ethereum, right? And then so when it comes to Bitcoin alignment, so like I've been telling my portfolio, like 2 of my portfolio here. So I've been telling my portfolio company, like Bitcoin portfolio company, that if you really want to align with Bitcoin, and probably try to align with a Michael Saylor first, like as a joke. So then what are we aligning here? Like what is the best like signaling when it comes to Bitcoin alignment, or like do we have to align with Bitcoin? So yeah, so probably from like Sanka, because Sanka is from Cosmos, and then so more on the smart contract world, and then but like also like working on Bitcoin. Yeah, so like how do you see this Bitcoin alignment?
Yeah, so I think that's a great question, and I kind of feel like the best thing of Bitcoin is actually like there is no political figure. So as a developer, you can actually come in and really have this disruptive mindset that, okay, I want to come and build on Bitcoin, and I feel like that really brought me to the Bitcoin ecosystem. But in terms of, I think the nuance of that other part of the question is, let's say you build a protocol on Bitcoin, how do you source liquidity, right? And there are some really big pockets of liquidity, the miners, some big OGs who are holding. But I think the best thing which has happened to the Bitcoin ecosystem is the recognition of the Bitcoin ETF, because the way the ETF mint and redeem process works, that actually I can see is helping pretty much the security budget halvening, which is coming. So the Bitcoin ETF, in like a very simple spring mass system analogy, the Bitcoin ETF has enough cushion to damp out any volatility which is going to come with halving. And personally, I feel like Bitcoin being of interest for passive asset managers, the passive asset management company with like BlackRock or something is like $10 trillion or something. So when you have passive asset managers who are taking active interest in investing in you, that could only put a lot of capital into the system and help the builders.
Cool, Matt?
Yeah, when you're talking
Are
about...
we going to align with like BitBlocker? so I'm just messing around.
No, when you're talking about Bitcoin alignment, I figure it's like you're aligning with whom. So you could align with Bitcoin's vision. So if anyone tells you that, they're a scammer. Don't listen to that. Anyone who says they know what Satoshi meant, we've learned that that's not a good idea. So after that, it's like, okay, you can align with core devs? No. You could align with thought boys? Probably not. So the other stakeholders I see are miners and Bitcoin holders. And I think it's clear that on the network side, a lot of times protocol designers want to align with miners. But I think the way forward is to align with holders, right? Because like, who decides a hard fork in Bitcoin? An economic majority. So who should we align with as builders? Well, we should be helping the economic majority. So if you hold Bitcoin, if you want to make Bitcoin useful, for me, those projects that support that, that's Bitcoin alignment.
Cool. Like Monique?
Yeah, I think the way I think about this is I'll go back to the mental model of like separating out Bitcoin, the asset, from Bitcoin, the rails. Yeah. And similarly, like for example, I was at ETH Denver and people were like, oh, you're a Bitcoin maxi. I'm like, I'm actually not a Bitcoin maxi. Bitcoin maxis actually argue with me. But there is a subset, there's a different concept, which is a Bitcoin monetary maximalist, right? I think that is the alignment. Like, like a lot of people relate to that, hey, I'm a Bitcoin monetary maximalist, which means that I believe in the 21 million hard cap. I believe in Bitcoin as money. And that actually simplifies Bitcoin a lot. Because what is Bitcoin? Bitcoin is money. That's the only job it has, especially at the L1. And I think that sort of clarity and simplicity is actually very important. Like if you look at Ethereum even, like ETH was trying to do like, ultrasound money, but it's still a very experimental development platform. So it needs to upgrade, it needs to change. Bitcoin L1 doesn't, it's money. It needs to be durable, it needs to be stable, right? So I think this monetary maximization is sort of like a thing I can align with, and then all the experimentation can happen on the L2s. So it's a little bit like you align with the 21 million hard cap Bitcoin is money, and then it's a free system. Then you're open to experimentation. Do whatever the hell you want to do with the system. It's open, it's permissionless, you're a developer, whatever you want to do, go ahead and knock yourself out.
Yep, 100% with you, Monique. And my mental model is like the layer 1 Bitcoin is like a M0. Like when it comes to like the monetary term, right? We have like an M0 as the spot Bitcoin, and like everything happen on top of that is like an M2. Right, so it's just like, so it's a very easy mental model, like even for like the newcomer, like to relate with as well. We have like less than 10 minutes, and then so let's zoom into some of the personal journey with like each of you guys, and because okay, probably start from Monique, and you have like gray hairs now, and like it used to be all black.
You look great.
Yeah, and so like crypto is like crazy, right? So it can be really like mental aging like on all of us. And then so for most of pretty much all of my 2017 portfolio founders, like most of them, they either check out, retire, or like broke. Like there's nothing in between, right? So like what keeps you going, right?
Yeah, so
for like 10 years. It's like 10 years.
You're 11 now. So one of our earliest investors in the Balderov account, he's actually here in Dubai. I was with him yesterday, and he said that in crypto, the #1 rule is survive.
100%.
If you stay alive, you'll be fine, right? You'll be fine. You'll figure it out. You will be successful. And I think that's like that, and that has been sort of like a thing that we've been doing. It's like I have this mental model that sometimes I tell myself like, hey, live to fight another day, right? If you're having a really bad day or something's not working, whatever, just live to fight another day. We'll come back to it, right? Mm-hmm. In terms of like, I do think like if you look at the last cycle, like how many companies blew up, how many bankruptcies happened, right? Like it's like people who are who believe in the fundamentals, who are doing the right thing. Like I think eventually it sort of like works out, and then you have to prepare. Like for example, when we are building a team, like we actually onboard people to this mental model that is very volatile. There are these like bull runs, which are expansion periods. There are, like almost like 3-year bear markets. But if you like prepare people that this is how this world is, just sort of like mentally train yourself to mostly be running a marathon, but then sprint for like 1 year when it's like the bull market, which is sort of like where we are right now.
Yep. And Matt, what about you? Yeah, so I would just want to add like a very quick color. Like we were just talking about the 2015, 2016 Satoshi's Roundtable, like back in the day when I met probably on the other side. And then, so Matt, so how do you guys do this venture studio stuff? Because it's very, very hard to keep the team within the space. And then so you have amazing like team retention on Thesis.
Yeah. So wise man once said, stay humble, stack sats. A lot of our focus with hiring is people who won't let it go to their head when they make their millions. I think that something that's really important for this audience to remember is like, you're not brilliant, it's a bull market, right? And once you find the people who are aligned and who understand that, and then they just want to see the world change. So for me, that was, I was deplatformed by PayPal back in 2013. For some of my teams, it's like, they wanted an alternative to some chat program, to OnlyFans, all over the place. Anywhere you see someone, I think, being censored, I think that's incredibly motivating. And yeah, I mean, the right people will stick around, bull to bear, and I think it's on us to hire those people.
Cool. Yeah, Sanka?
Yeah, so I think I lost a lot of hair, and I regret that. But like, yeah, but I think this market cycle is very different than the other two market cycles. 2017 was very speculation-driven. 2021, lending-driven. I think this is the first market cycle with EigenLayer, Babylon. You're seeing that crypto infrastructure products have really arrived. And when you look at short-term risk-free interest at 5%, and the crypto industry, the Bitcoin, the ETH, they're still at like 60, 70 grand. What I see is like the market is really pricing crypto with the product fit, crypto with the infrastructure build. So I think that's a great journey for everybody who wants to enter the space to invest, to build.
Cool. Yeah, and I think like for our space, it is not for survival for the fittest, and there's not such thing as the fittest, right? Because we have to just like keep evolving and like keep adapting. it's more about survival for the last remaining. So we're like remaining, and then so still hustling and still grinding. And yeah, so probably like the few last thing is if you have like any advice or just like any advice or just like quick TLDR for like the new Bitcoiner. And then so what are the advice that you want to give them? And so from Sanka.
So maybe the first thing is I always like to give out some open ideas. Like if you have like developers looking for new ideas. So one of the big discussion points we had on the panel was like these different L2s being built on Bitcoin. So the interoperable layer, let's imagine like someone wants to build an IBC for Bitcoin to make these L2s interoperable. That would be a great benefit. The tooling, the wallets and everything, like what if you're an ETH maxi and you know how to move between the L2s on ETH and the base chain, can that same seamless experience come to Bitcoin? So those are some great ideas. Whether you want to build it on any of our protocols or want to reach out to us, we'll be very open for it. And I think like the Bitcoin ecosystem is moving towards in the same direction in terms of like language preference. So if you're a Rust maxi, which is what I am, you could just learn Rust and you could still build a lot of products. So yeah, just learn Rust and you could actually build on POS, Bitcoin, or build new ideas.
Yeah, Matt, like any words for like new Bitcoiner or like Bitcoin founder?
Two pieces of advice. Don't meet your heroes. Stay open-minded. So if I've learned anything in this space, I mean, the narratives change every quarter. Bitcoin has the most stable narrative, but I was there when the store of value narrative wasn't a thing. Yeah. And so I think, you know, it's great to fall in love with an asset. That's fine. And it's fine to fall in love with the space. Yep. But you have to be careful because the people that we're all retweeting, getting excited about today are tomorrow's scammers. And you have to really focus on, like, what's the underlying thing that's interesting here? And I think that's freedom. So, yeah.
Yep. Monique?
All right, so for new Bitcoiners, I feel like I'm in some, like, you know, everybody is like in some WhatsApp groups where your friends are suddenly excited about crypto and so on. So I think I saw a message recently, and this friend was, there was a recent dip, I guess, and like 20%, 30% something, and he was like, hey, should I cut my losses or do what? I was like, wait a minute. If on a 20 to 30% dip, you're in negative, you have the wrong portfolio, right? Like you need to exit your portfolio because a 20% dip is like a Tuesday in crypto, right? Like this just happens all the time. So I think my advice to people is, first of all, personally, I separate Bitcoin from everything else. Like Bitcoin for me is savings technology, right? So you are, just like you do savings every month, like this is how you think about Bitcoin. Like if you want to, where are you putting your savings? That's Bitcoin. Then you have some sort of like experimental money, right? Like, sure, some people like to go to casinos, but you need to realize that you're sitting in a casino right now, right? If you're buying meme coins, if you're, you know, investing in some new thing, like I think crypto is like a combination of all these different things. Some of them look like new startups. You're actually trying to invest in something which is like a startup idea versus like a casino ticket, which is a meme coin. But you have to like mentally separate those out, have a very separate category for what is my savings, what is my sort of like play money, what is my experiments that I want to learn, right? Like one of the best things people can do is actually try to use the products. Like especially with the Bitcoin L2s coming and these new yield products coming and new wallets and whatnot, like the more you actually sort of like do it yourself and try to like tinker around and play with things. If there's a new DeFi protocol, instead of thinking that, hey, how do I make money on this? Why don't you become a user? Why don't you actually try to use this thing and try to understand what it actually does? And I think the money sort of like follows from that sort of curiosity.
Yeah, cool. I think we're perfectly on time. And okay, so thank you for all the panelists, and then see you guys in the next helping. Okay?
All right, thanks a lot.
See you guys.